Hey, welcome back, everybody. My name's Patrick. Welcome back to our channel. As always, we're here to hopefully give you a little education and a slightly different perspective here on the grain markets. We wanted to take a look back at a year ago. What we have in front of us here right now, December corn chart, we're trading around 560. This is the December continuous chart. The blue line represents an area that we think this market can get back to, where we're going to kind of have some sales targets up near that 590 area on new crop corn. Rolling over here, this is what we're looking at. When you compare things to a year ago, you had U.S. ending stocks on the March report at 1.4 billion bushels, world carryout at 301 million metric ton. You had the D22 corn contract at 675 roughly, that week. And so going over to the recent March report, you're looking at a 1.3 billion bushel carryout, 296 million metric ton on the world, and our corn price is sitting at 560. Now, again, we know these markets are forward looking, but ultimately the point we're trying to make in here is that maybe near term, things are a little overdone to the bear side, and the bulls need to step in here and rally this market a little bit. Here we are going over to the beans. Again, November new crop bean contracts trading around 1310. That blue line sits just above 1350, 1375 area. We think is a good spot that this market can get back to on a reasonable rally. Again, looking at the USDA numbers, a little different scenario where you have U.S. ending stocks are lower compared to last year, but world stocks are a lot higher. So this is where the bean market's getting jammed up just a little bit. But again, when you compare $15 beans at this time last year compared to 1310, again, you kind of got to wonder if this thing has some potential upside here in the short term. Going over to wheat, this is the Chicago July contract sitting around 7. Been trying to put some bottoms in here, and again, the blue line is up near 8. That might be a little aggressive, if you will, or optimistic. 758, somewhere in there. You can see the moving averages are quite a bit higher. Again, going back to last year at this time, ending stocks in the U.S. were forecast much higher. World stocks were higher as well. Now, you did have the background of war going on, so there's some extra premium in there. But again, our whole point is, in the near term, I think these markets, our position at these markets are just a little bit overdone. So what can you do? You can do, if you're looking at fixed risk, call spreads are always attractive. Call us or call your broker. And you can look at getting some of those in place. Otherwise, you could certainly go with straight futures. We always encourage stop losses as your downside risk can be significant on futures. So again, visit with your broker or give us a call if you have any questions, and leave a comment below. Let us know what you're thinking. Are you bullish at these levels? Do you think we can see a little bit of a bounce, or are you more bearish? Do you think we have more downside here in the near term? We're always curious to see what everybody has to say. So, hey, look, we appreciate you tuning in. If you enjoy our content, please hit the thumbs up button and make sure to subscribe so that you get notified when we send out new videos. And again, thanks for tuning in. We hope everybody has a great week.